Palisade Radio is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome to another episode of Palisade Radio. On the show with us today is Amir Adnani. He's a new guest to the program, but most of you listeners will know who he is. He's a lifelong entrepreneur and a mining executive for the past 15 years. He is currently the chairman of Brazil Resources and the president and CEO of Uranium Energy Corp. Amir, welcome to the program.
Hey, Colin. Thanks for having me.
Well, I want to focus today mostly on the uranium market. I don't know what it is, but whenever we put out a piece on Palisade Radio that's focused on uranium, despite it being such a niche market, it gets so much attention. And maybe that's a good point to lead from. When there's so many people interested in the space right now, Amir, and there's so few companies that exist in the space, how are you seeing a market that's still so depressed at this point?
It's really incredible, isn't it? It's the ultimate contrarian investment, uranium. And it's also probably one of the most hated commodities to some extent because of a lot of kind of views that are out there with respect to nuclear power. But more and more, I think what we're seeing and finding is that a big part of the nuclear narrative in this last 6 months has been the emerging support from the environmentalist groups and the environmentalist camp, the green camp, that truly recognizes you cannot have a world with population growth and demand on electricity without CO2 emission-free power generation, which is what nuclear provides. And so the long-term fundamentals continue to be incredibly positive for the space because we have over $700 billion of nuclear expansion taking place worldwide right now. But at the same time, it's very difficult to bring that back and make sense of the current spot price. I mean, I think that's to your point that we have the spot uranium price at almost a 10-year low, yet some of the best fundamentals we have seen for the nuclear industry over the last decade. And looking out, it looks like the next 10 to 20 years will be really some of the most spectacular years for the nuclear industry with more and more reactors coming online. So that probably brings me back to the sort of first point, which is why it makes this truly a classic contrarian situation right now.
Well, globally, we consume more uranium than we produce, and the cost of production is currently higher than the quoted spot price. Those are two fundamental issues that exist in the nuclear space today and should bode well for uranium investors. The problem is those exact same issues were in play 4 years ago, and yet investors who bought on those fundamentals 4 years ago would have suffered some very bad losses in that time frame. I guess my question here is that just because the fundamentals line up, and this is something that Rick Rule discusses oftentimes, it doesn't mean a change is necessarily imminent. But timing is very important. Amir, do you think that we're going to see a change in the near future, and what's actually going to tick that change?
Yeah, so when you look at the uranium price, and part of where it can be frustrating for investors looking at the uranium market and uranium pricing is that this is a commodity that is not listed and actively traded as oil or gold or copper would be. And so the market is perhaps more opaque, and at the same time, the spot uranium market we keep talking about, the spot price, is actually very illiquid. In fact, only about 15% of global volume of sales in uranium go through the spot market. Utilities that buy uranium typically prefer to buy uranium under longer-term contracts with pricing not, again, being as readily available to you and I because a lot of these contracts might just be between the supplier of uranium and the buyer. So ultimately, we have had 5 frustrating years in the uranium business post the Fukushima incident in Japan. Yes, it has been really challenging, and it's been testing on really the patience of investors that have been involved in this space. But Colin, I'm just thinking about our own company right now, UEC, for example, and just in the first quarter of this year, based on some of the institutional filings that came out just last week, we see new institutional investors adding to their positions and really taking new positions in our company and also in the space. So yes, it has been testing, but as the adage goes, the cure for low prices is low prices, and we've seen the industry kind of heavyweight Cameco now in the last couple of months announce basically production cutback, shutting down one mine in Canada and reducing production in the U.S., having basically a major round of layoffs. And so you can see that while it has been slow, all the classic signs you want to see in any commodity that indicates we're at the bottom or near the bottom, and that at some point we should see an inflection point. All those signs appear to be there in the picture right now for uranium. So it's been 5 years. We are seeing a recovery in Japan, while it's much slower than anyone anticipated. We are seeing the companies in the space like Cameco indicate that they're shutting down because the uranium prices definitely have fallen, below their levels of being able to sustain these mines. And so again, it might be slow and it might be a little painful, but it definitely seems like we could be at a turning point here.
Well, let's talk a little bit about the public perception of nuclear power. Japan has started to turn the reactors back on. It's a daunting process, but in the correct path. China's continued building furiously to meet the demands of the billion people that live in China. I read a report that came up on Bloomberg. I'm not sure if you've heard this, but Exelon announced that they'd be shutting 2 nuclear plants in the United States. The reason that they're giving is that the capacity that they're producing it has not provided profitable business for them on those 2 reactors. Have you heard of the news of Exelon shutting down 2 of their U.S. reactors, and do you think that will have any impact?
Yeah, I'm familiar with that news. It is unfortunate. It's part of the really the nature of the markets in the U.S. where you have states where Exelon's plants are, for example, that are deregulated markets, and then you've got regulated markets in the South where, for example, Southern Energy is building new reactors. And so ultimately, it's quite challenging, I think, when you consider the various benefits of carbon-free electricity that nuclear powers are able to provide, for them to be in a deregulated market, basically competing on just the pure cost of electricity on a wholesale basis. And there was definitely some issues with the Illinois legislature that led to the news of Exelon that you're describing. But at the same time, when you look at the net picture, you still are going to see in the U.S. about 20% of electricity generation come from nuclear power. And nuclear power in the U.S. will still be over 60% of the country's CO2 emission-free electricity generation. And so ultimately, it's very much part of the energy mix in the U.S. And when you look at, again, the emerging market growth, which is where, again, the real growth in this industry is obviously coming from, and the latest 5-year plan that China unveiled in March, where they're talking about going from 27 gigawatts of nuclear power generation right now and growing that to about 160 gigawatts of power generation by 2040. So 6x growth over really as a brand new data point that they've put out. And so it's very compelling. And I think ultimately it's really about this energy mix. It's about this idea that if an economy and a society wants to have access to a reliable healthcare system, a reliable transportation system, a reliable education system, all these things require baseload power, right? That 24/7 power generation, which is the hallmark of what nuclear generation can do, the ability to store power and the ability to be there as the backbone of the electricity grid, and again, while not polluting the environment. Really, I think you bring the picture back together, we see that the number of reactors that are operable worldwide are not today, not that far off compared to where they were pre-Fukushima. We definitely have more reactors under construction today than we did pre-Fukushima. And with new projections out of some of the key emerging markets and countries like China that are now higher projections than they've ever been, And so we go back to this picture that the picture today for nuclear power is the best that we have seen it in the last decade. And that's the part that doesn't reconcile with this low point in the uranium price, which is at the 10-year point. And I think if the uranium price has to adjust, it's not adjusting down. It's going to adjust up. And it's adjusting up to the realities of mining uranium, where, and that's, perhaps we can talk about next, but I want to give you a chance to ask a question. I don't want to go off for too long.
Well, Amir, the glory days of uranium really took place between 2003 and 2007, and I saw it very closely even at a young age as my father started a uranium company, and that was a similar time that you were starting UEC, which has now been built up into one of the biggest names in the business. And what I remember the most was, aside from the actual commodity going up several fold, the uranium equities, the amount of money rushing into such a small space caused such a dramatic rise. It can't be paralleled by any other sector besides maybe the rare earth sector when that took off a few years ago. I remember a company like Energy Fuels saw a 46x gain in 2006. To be able to put your money into a stock and make 46 times in 1 year is truly incredible. With the situation that we're in right now, Amir, do you think that we're going to see a rise that's similar to what we saw between 2003 and 2007 again?
Well, it's a very different market in my opinion, and I think what we had in 2006 and 2007 was perhaps elements of speculation were in that market at the time. China didn't have nearly as many reactors as it has under construction today back then. It was more about the concept of a nuclear renaissance that was taking place back then. And you had hedge funds in 06 and 07 actually having found a way to participate and buy physical uranium. And so it all of a sudden went from the whole uranium business being about maybe 20 companies in 2005 worldwide active in uranium exploration and mining. And by 2007, there were over 600 companies involved in exploration, mainly exploration, but to this day, there's probably less than 10 companies in the world that have production capability. And the reality is we're back to that point now after, again, this 5 difficult years in the market where you do have the scarcity factor, which I think goes back to your point. There is scarcity factor. There's only a handful of companies in North America with production infrastructure and production capability. It's a very difficult business from a licensing point of view. It's much more time-consuming, and it takes a longer period to permit a uranium mine in the U.S., for example, than a gold mine or a copper mine. And so there's, again, going back to the scarcity of players in the space, and the fact that the ones that are publicly listed that you can actually invest in, the combined market caps today are probably, maybe $6 or $7 billion max, right? The combined market cap of all listed uranium companies. Some of the big uranium producers you couldn't invest in because they're state-owned. The world's largest uranium producer being Kazatomprom, the Kazakhstan state-run uranium mining company, it's a state-run company. And same with some of the other big players, be it Korea Electric Power or China General Nuclear. So you also have this sort of setup in the market that makes it more limited for investors to be able to participate. So because of that scarcity factor, I think you certainly have a situation where when the buy side and when generalists decide that they need to have exposure to uranium and that the time is right because the move is starting to take place with the uranium price, there could really be incredible moves here for the equities and the companies that are active and involved. I mean, you look at our own company, we got as low as 20 cents a share in 2008. In December 2008, we're talking about the very lowest point and the most difficult point of the 2008 financial crisis. And pre-Fukushima, you can see we had gone from that level to basically a high of $7.50. And these moves could happen so quickly in the uranium space, again, because of the fact that you've got so few ways and so few investments that could be made by the market to have exposure to this industry.
Yeah, well, Amir, you're talking about quick moves to be made in the uranium sector. I want to talk about Uranium Energy Corp, your company, of course, and just the trading action over the past few days where you can see 20 or 30% moves up and down in a day. It's a very volatile sector, but when you get into a good market, substantial gains can be made. I believe that about 8 months ago, your team made the decision to shutter operations due to the low spot price. I want to find out what your plans are for the next year or 2 years, hopefully in a better market, but in either case, what the plans are moving forward.
Yeah, so and you've seen this really in the uranium business and in other commodities as well, where when the uranium price or any commodity price falls to levels that is just simply too low to justify the kind of return that you expect to see on assets and resources that have taken a very long time to permit, it just makes no sense to deplete your resources just so you can turn dollars. And we have had quite a bit of success actually in attracting large institutional investors that really share this view and have been backing us in taking our focus off of depleting our resources and producing in this low uranium price environment, and instead have put our attention on building our resources and our future production capability. For example, in the last 2 years, we made a brand new discovery. Probably the only new discovery that was made in the United States is our Burke Hollow project in South Texas. This happened during the last 2 years while instead of, again, depleting our resources with production, we shifted towards those longer lead items in the business, which is making a new discovery and then advancing it through permitting. So Burke Hollow is a great example of a project where we made the discovery. It was a grassroots discovery, but then we drilled almost 600 holes, established an initial resource, and then began all the production-related permitting, which is, again, a time-consuming step. We believe that perhaps by the end of this year, we could be in a position where we could have the project very well advanced on the permitting front. Now this becomes and could become our third fully permitted project in South Texas as part of our low-cost ISR hub-and-spoke strategy, where we have our Hobson plant as the hub and the hub-and-spoke, and then we have already two fully permitted projects at Palangana Goliad, and then with Burke Hollow coming up as the third project. We've also turned our attention over to making acquisitions because with the downturn in the uranium market, it actually represents a great time to make accretive acquisitions, increase our total inventory of uranium in the ground in good jurisdictions, in places where you have a mining-friendly culture, be it in the U.S. and also expanding also outside of the U.S. into South America, where we've really expanded our footprint and our portfolio. So when you look at, for example, last week with the latest filings made by institutional investors, it's amazing. You see uranium at this low point in the cycle, frustrating times for uranium investors, as we talked about, but yet we're seeing, for example, names like JP Morgan Asset Management filed now last week that they've taken a new position in UEC as of the first quarter of this year, almost now owning over 5% of our company. BlackRock having added to their position in the company. Even Goldman Sachs Group has initiated a small position in the company, but interesting to see that, right? And along with our existing institutional investors like Sprott and the Hong Kong billionaire Li Ka-shing, who's continued to really be a strong supporter of ours. I mean, you look at these names and you look at these types of caliber institutional investors, and UEC today is a small cap company. Our market cap is about just over $100 million, but yet you see some of the biggest institutional names imaginable involved. And again, that speaks to not only, I think, the strategy of how we're positioned as one of the only unhedged uranium developers and producers out there, but also the fact that these assets are in geopolitically stable jurisdictions. Much of the uranium production growth in the last decade has come from jurisdictions that today investors and utilities, the end users of uranium, are concerned about. You look at issues that might exist in sub-Saharan Africa and Kazakhstan and Russia. These are major suppliers of uranium. So to have uranium in the in the United States, in the Americas, in places where you have geopolitical stability. This, to me, is where the next 5 to 10 years we're going to see the real growth take place in the uranium business. And this is where actually we've had the least amount of growth in the last decade. So the pendulum is going to swing towards our side of the equation. And I think that's also why you're seeing the positioning of the institutional money that we've been attracting.
And I think another major factor of these institutions coming into UEC in particular, and maybe you're too modest to talk on it, is your ability to raise capital as you have done in bad market conditions numerous times in the last few years when money has been needed. You've managed to find major investors to come in when other companies were faltering, unable to keep the lights on. And I will give you a lot of credit for that, and I think that many investors do. Amir, I want to end here by looking more broadly at the resource market. We've obviously been in what seems to be the beginning of a bull market here, particularly in gold. And you have a very prominent gold exploration development company named Brazil Resources. It has done exceptionally well over the past couple months in terms of appreciation. Can you talk to our listeners about what you see happening in the overall resource sector right now, and if you'd like to touch on Brazil Resources in particular?
I think, we've seen such a strong correlation for commodity prices in general in the last few years to the U.S. dollar, and this incredible run that we've had in the U.S. dollar until, call it the beginning of this year. And it's potentially fully priced. And so, of course, we see this situation now year to date or since the beginning of February, where with the U.S. dollar really getting somewhat softer, it hasn't totally pulled back, but relative to the run it's had the last 3 years, it seems to be in a different kind of trend now than it has been. This has definitely helped underpin the sort of price appreciation we've seen for various commodities, and obviously in particular gold. I think we all admit that when you look at some of the fundamental demand linked to economic growth for things like copper or iron ore, we're not out of the woods yet exactly there, and that it really you can't sit here and say that these commodity prices are appreciating because demand is now all of a sudden fundamentally changed, but it's really this currency relationship to the U.S. dollar. And I think one of the major really winners here is gold, and we see this situation that is the first time in my lifetime, and I think it's anyone's lifetime, where you've got trillions of dollars of government bonds and sovereign debt negative with this negative interest rate yields that we're seeing for the first time. So I think it's an incredibly bullish setup for gold and all commodities. Something like uranium is so different in the sense that it's a depleting commodity. It's being used for power generation, and when it turns, it's going to turn, and it's going to be completely linked to the demand for uranium from power generation. But what we have for gold here as really an alternative currency, as the ultimate way of preserving wealth and creating wealth, there's something really exciting there. And what we've done with Brazil Resources, Colin, is the model of acquiring projects when the market was bad. Most of the work that we've done with BRI was done when the last 3 years, when the market was really in a difficult position for junior companies to raise money. Very selectively, we made a number of acquisitions. We were not in a rush to make acquisitions quickly. We were actually taking the slow cooker approach, just doing deals that made sense, very tight deals. Today we're sitting on over 10 million ounces of gold resources in all categories, and that's an exciting resource base. That's something large and tangible that is really attracting the right investors. But at the same time, insiders in Brazil Resources, including myself, own a third of the company. So it's just a very fundamentally sound capital structure with some very large gold resources underpinning the whole thing, and lots more I can tell you about it. But again, I don't want to go on for too long. But hopefully that answers your question.
Yeah, it does. Thank you so much, Amir, for coming on the program. It's been a pleasure having you on, and we'll have to get you back here later in the year. I anticipate that a uranium bull market's coming quickly, but I could be completely wrong. I'm certainly positioning myself There's no point, in my opinion, with low prices right now, even if things are not imminent, to not start getting positioned, because as you mentioned in the interview, when things move in the uranium space, either you're in or you're out. Amir, thanks so much for coming on the program.
Thank you, Colin.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?